good morning. So, in the last class, we have discussed about the casting and all those and estimation of mechanical process. And today we discuss about the depreciation. So, what is meant by depreciation? So, depreciation can be defined as say it is nothing but a decrease in the worth. It is nothing but decrease in the worth of any article, or we can say it is a measure of wearing out wearing out how much is wear out, or we can say the consumption or other loss of value of a particular asset of an asset or product. Okay, so that is decrease in the worth. So depreciation is nothing but there is a decrease in the worth. So there is nothing but reduction of the value. Decrease in the worth in the sense reduction in the value of any asset, any physical asset, value of any physical asset. So as with the passage of time, so as the passage of time is aging of any particular product. So as the time is increasing, so the value or functional value or the value of the particular physical asset will be reduced. So that is what we can say it is depreciation. So depreciation basically means decrease in the worth, or we can say the reduction in the value of any physical asset with the passage of time. And also it is a measure of the wearing out or consumption or other loss of value which is depreciable asset where the arising of from use or passage of time or obsolescence through technology or market changes. All this we can call it as the value of the product or asset or obsolescence of the any through technology or and many market changes which you have. So that we can take into a definition of depreciation. And say one more, we can say appreciation. So appreciation and depreciation is the opposite word. So opposite word of depreciation is appreciation. So appreciation is nothing but there is a increase in the worth of any asset or increase in the value of any asset. So generally the lands in a real estate, so land rates are, it can be increasing as the time increases. As the time increases, land rates will be increased. So that is what we can say increase in the worth. So that we can call it as appreciation. Whereas depreciation, as the time increases, the value of the asset will be decreases, or worth of an asset will decreases. That is what we can say depreciation. So in business, depreciation is in business or organization or particular industry, we can take it as this depreciation as in, of all equipment is going to be calculated. Of all equipment will be calculated means, so depreciation of the equipment which are using in a particular organization is calculated, and it is taken as that is depreciation of all equipment is taken as it is a operating cost. So why we need to take this depreciation into account of all the equipments is it will reduce the taxes. It reduces the taxes. That is why we go for calculation of depreciation of all equipment. That will be come under the operating cost. Which will help us reducing the in taxes. Okay. So and in any industry, this is fair in organization and as well as in any industry, machinery. So we'll be working with the machines. So in these machines need to brought continuously to replace the old ones. So the new machines has to be run for a particular time. So run for some years. Afterwards, it has to be replaced old one. Replace with a we have to replace all this new mission. As the time increases, then it will become as a old, so that has to be replaced with the new machines, replaced with the new machines, so which requires money for this, which requires money. So this money is to be generated from the earnings of, because you have run for the so many years, this machine has to run for the so many years, so you'll be generate some money, you'll be generate some money. So with this money, so we are going to set with this particular replace this by generating of money from the new machine. So the new machine which you have set up and it has run for so many years, and after running so many years, it generates some money. So with this money, we are going to replace this particular machine. It's going to be replaced with the this is what we can say depreciation fund. So money which is going to be set aside from the earnings of this equipment which you have taken. So this equipment, so whatever the money earned from this has to be kept aside, kept aside. Okay, so which is taken as that is depreciation fund. This is what we can call as depreciation fund. Okay, so generally depreciation fund actually, established, it is established to accumulate the money for the replacement of any asset. So this is what depreciation fund means. We are going to generate the money from the new machine for so many years. After running for so many years, this fund will be utilized for the replacing of this product money. So now, one more. So this is what we can say. Whenever a machine or equipment performs useful work, yeah. See the efficiency of the machine, the efficiency of the machine as the time passages. Okay, as the passage of time, the efficiency of the machine, and as well as the value of the machine both reduces. The efficiency of the machine and the value of the machine will reduces as the time passes, means as the time passes, as the time increases. Okay, so that is what we can say the depreciation, the reduction in the value of the machine, which in terms of operating cost we are going to find out, and that is what we can call it as depreciation. So, and depreciation can be measured on the indirect and expenses, that is idleness, and as well as repairs and maintenance. Obsolescence is defined as a loss in the utility of an asset due to the development of improved or superior equipment, but not due to the physical deterioration. So this is one more very important term in the depreciation. So, see, obsolescence in the sense it is a loss in the utility, because suppose the new technology has come, loss in the utility, loss in the utility. So when the new technology comes and the previous old one, the traditional which you are using, the say for example traditional lathe or engine lathe, now the engine lathe is replaced by the CNC lathe machines, where this is the traditional engine lathe which we are working on. Of course, still we are using, but as the technology has come with the CNC lathe machine, where the accuracy and the accuracy is high in producing the product, so we can say this engine lathes will become obsolescence, means loss in the utility of the product due to the improved technology, these products will become obsolescence. This problem will be, I mean, this lens will become obsolescence. The product. So that is what we can say. This is also one kind of you're losing the money on the product you bought. Okay, so that is the obsolescence. And one more is idleness also we can be taken into the consideration of losing the value or losing the money in the as the process of time, because it is idleness is with respect to the time, with respect to the time. And also repairs and maintenance, repairs and maintenance. So every machine requires maintenance for increasing its life, for increasing its life. So we need to go for maintaining of the particular machine, maybe the annual basis, maybe on the annual basis, so that it can increase its life. And also we can keep the machine in good condition, and also we can keep the machine in good condition by going for maintenance and all, and also remove any unnecessary delays in the production if you have. So maintenance of the machines are very much required, very much required. So, and repairs, if you talk about here, repairs is nothing but is the process of they bringing the defective machine into efficient working condition. So repairs, if there is any defective machines are there, then bringing them into a efficient working conditions by repair, efficient working conditions. So we can repair the machine so that it will work in a proper way. So here the maintenance is to improve the life of the machine. To improve the life of the machine, we can go for the maintenance. So repairs and maintenance are required for any organization. So repair is the process of bringing the defective machine into efficient working conditions. So every machine has to be repaired after some time, because there will be a failure of running for so many years. There will be some failure, so it has to be repaired after some years or some time. So that is what we can say useful life. That is what we can say during the, that it has to be done during the useful life of the machine. Useful life of the machine, useful life or service life we can say, or service life also we can have the. So service life of the machine will be there, say for example 10 years. During these 10 years it has to be undergo the repairs as well as maintenance. So some money has to be spent on this maintenance and repairs. So for determining the overheads, these expenditures should be considered. So remaining, I mean repairs and maintenance charges which are going to be find out, that has to be used by some of the methods which are depreciation method has to be used. Next we go with what are the causes of this depreciation. So why this depreciation can happen. Yeah. So causes of depreciation. So what are the different causes which can be because of this? Because of this, the value of the asset is going to be reduced. So what are those reasons? What are those reasons we can say give us? There are some of the reasons which you can say, that is physical depreciation. Physical depreciation. So physical depreciation is nothing but, see here we can say wear and tear. We can say wear and tear, because the wear and tear of operation gradually reduces the physical ability of any equipment. Main reason is wear and tear, because there are any particular machine or rotating elements, the wear and tear will be causes the machine reducing its ability, of giving a good job, I mean good performance or good producing the product with a good quality. So because of wear and tear of the operation, it reduces the physical ability. So wear and tear reduces the physical ability of any equipment. Physical ability of any equipment means the performance will be reduces because of this wear and tear. And a good maintenance program may probably improve this if you go for good what you can say the maintenance. We can say maintenance, if you are undergone the maintenance, so this will be improved, this wear and tear will be minimized, so that the life of the equipment or machine can be improved. So in addition to the normal wear, so we can say the accidental physical damage. Say maybe sometimes there might be happens this accidental I mean this there will be a happening of some accidents during the working condition. So this accidental physical damage also reduces the physical ability of the machine. So that is why wear and tear it is a additional cost to the production. So wear and tear is the additional cost of production. So that is what we can give as the reason as a physical depreciation. So an asset which is declines on account of continue usage of your plants or machinery. So there will be depends on the quantum of use of an asset. Of course, a factory works double shift instead of single shift. Will work on say 8 to 2 and then 2 to 10. So there are two shifts here they are working. Say for example, then we can say here. Uh, you keep running the machine for 2 shifts. So you're working on the same machine for almost from 8 to so it's around 16 hours, which is you're working on a particular machine. So there will be a chance of reducing the wear and tear, so that the working conditions also they will be reduced. So by making that proper maintenance of this machine, you can improve the life. So the cost incurred because of this wear and tear. So that is what we can take in as a depreciation charges. So now second one is functional depreciation. Functional depreciation, you can take it as, say, performance of many equipment continuously decreases with the time. So performance of the equipment or a machine decreases as the time increases. As the time increases, the performance of the equipment decreases. That is what we can say. It will not meet the because of the reduced performance, we cannot meet the demand. We cannot meet the demand because of due to the reduction in the performance. So generally, in other words, what we can say is demands made on the asset may increase beyond its capacity to produce. So the demand for services may stop to exist. A machine may be producing a product well, but the product will be no longer in demand. So here the performance of the machine is decreases, then the demand for the product we cannot meet the demand for the product. So automatically there will be a reduction in the demand for the particular product. So functional depreciation depends on the performance of the machine. So there are certain, say for example, physical decay, insulation of materials, furniture and electrical cables, building, chemical and vessels, all this which you can say it decay as the time increases. So that is the value of these articles will be reduces the value of these articles will be reduces as the time increases. Right. Then third one, technological depreciation. That is what we can say obsolescence. Obsolescence in the sense, say you may develop the new machines, as we told that the CNC machine is a new machine compared to the engine lathe. So development of new machines or process new machines, okay, and the process may render the current ones which is uneconomical. That is, engine lathe will become uneconomical. Compared to the CNC lathe. So this is very true in the current developments in all the technologies. Current development in the technologies. It may be a software, or it may be electronic goods, or it may be any telecommunication products. So if you take the mobiles, even the mobiles is also the softwares or the apps, whatever it is, the features which is increasing. So it is becoming obsolete, the old models are becoming obsolete here. So that is what we can say obsolescence. So the new development in the technologies, the new development in the new methods or new technologies of the machines which you say, so the old one will become obsolete, so that is what we can say technological depreciation. That's what we can say technological depreciation. Next, one more important parameter is say sudden failures. Sudden failures. This generally, that is a sudden loss in value of an equipment. Sudden loss in the value of equipment. So sudden failure is nothing but sudden loss of value of an equipment. We can say sudden failure. So due to the presence of any maybe inherent technological flaws, if you have any inherent technological flaws, the equipment fail. So that is what we can say sudden failure, sudden loss of the value of the equipment because of there is some defects or technological flaws present in a particular equipment. So this, of course, this is sudden failure will not be come under the loss due to accident. It will not come under the loss due to accident. So this is because of only if there is any inherent defects or technological defects. If you have that, machine will not work. So sudden loss of the value of an equipment because of there is some defects inherently present in a particular equipment or a machine. So these are which you can say the category of assets which include the items used in the larger number, which is very low in the cost. Now depletion. Then one more reason is depletion. So depletion is nothing but consumption of any exhaustible natural resources like petroleum, coal, and so to a depletion sources, because as you keep consuming this is what you can say non-renewable resources. If you continuously use this, you're going to deplete. So this can reduce the worth of the sites from where these sources are exploited. So the reducing in the worth of the sources means from where it is exploited, that worth of the sites. Okay, it is the reduce the worth of the sites from where we are going to get this worth of the sites from where these resources, natural resources, from where these natural resources are exploited. These natural resources are exploited. So there is a reduction because as the time increases, this can be it cannot be replenished, and that is why it is called non-renewable resources, where as the time increases this will become obsolete, this become depletes, this can become depletes. So that is why the worth of the sites of from where we are going to get these natural sources will become reduced in the worth, reduction in the worth of that particular sites as from where we are getting these natural resources. So depletion of natural resources lead to a reduction in the earnings. So as there is a reduction in the natural resources or depletion of natural resources, there will be a reduction in the earnings, obviously. So that is why as the reduction in the earnings, the worth of the sites from where we are going to take out these resources, that will become reduced. So that is the depletion is also one of the component which we can take it as into the depreciation, causes for depreciation. Yeah. Next is we can take it as monetary depreciation. So in this depreciation calculations always consider the original prices of assets. So depreciation, I am going to calculate the depreciation based on the original prices of assets, based on the original prices of assets. So depreciation is calculated based on the original prices of assets. So these prices can vary. These prices, the original prices can vary, of course, due to so many reasons. Maybe the market forces are okay. So there will be so if the price rise, if the price rises, if the prices rise during the life of asset during life of an asset, so then a comparable replacement becomes more expensive because you have taken the a new machine at a particular so and so time, and as the time, say for example, at a particular after 5 years, the same machine, maybe the price may be rise, the price may be rise for the same machine, and due to some reasons, that's what we discussed. So this, the replacement will become expensive. So when I'm trying to, after some time, after some years, the replacement of this new machine with a new one, because of the price rise, it cannot be replaced, so it will become more expensive, so it will become so costly, so in replacing the old machine, because of the increase in the price of that particular equipment or a machine. So this means that depreciation fund which have set aside, that is what we discussed, depreciation fund will not be sufficient. That is depreciation fund will not be sufficient to buy the new machine or to replace the old one. So it will become insufficient to provide a substitute for this worn out machine. So this is the old machine, I can say old machine. Okay, so to replace it will not be sufficient. So it also suggests that the selling price of the product being produced by this machine will not be reflect on the cost of production. It will not reflect on the cost of production. Whatever the product which you are going to produce by this will not reflect much on the cost of production. So the depreciation is actually happening to the invested capital, representing the equipment instead of the equipment itself. So monetary depreciation is very difficult to accommodate where we have, because there is a price changes will be there. So monetary depreciation cannot be even considered as a operating expenses. So monetary depreciation is related to the price of the product. So it will not taken into operating expenses. This monetary depreciation will not be taken into the operating expenses. So, and also as we told, that depreciation by obsolescence, that is technological depreciation, and also accidental depreciation. So the accident may occur due to some wrong operations or some loss of component or some other causes, which may result in heavy damage for the organization. So the depreciation in the machine caused due to this reason is, we can say, it is called accidental depreciation. And depreciation due to physical decay, that's what, as the time increases, the raw materials or whatever it is, it get decays, so that the cost of this raw material will become reduces, the cost of metal will become reduces. So now this is of the depreciation what we have discussed about. Then what are the causes of depreciation? Now we'll discuss about the what are the different methods of depreciation. How you calculate this depreciation charges? That is what we can say methods of calculating the depreciation. So what are the different methods which you have? So here there are several methods for accounting this depreciation fund, but here we can have straight line method, straight line method, of depreciation, Second one is declining balance method. Second one is declining balance method of depreciation. Then some of the years are digits, we can say some of the years digits method of some of the years digits method of depreciation. And fourth one, sinking fund method. Sinking fund method of depreciation. Sinking fund method of depreciation. Then fifth one, we have service output method. Service output method. So these are the 5 methods which are there in your syllabus in calculation of depreciation. How to calculate this depreciation by these 5 methods? So one is straight line method of depreciation, declining balance method of depreciation, sum of the years digits method of depreciation, sinking fund method of depreciation, and service output method. So each method we are going to discuss now here. First one, straight line method of depreciation. Straight line method of depreciation. So here we are going to find in this method we are going to take the fixed sum. We are going to take the fixed sum is charged, a fixed sum, fixed amount, a fixed amount is charged as the depreciation. Is charged as the depreciation. Okay, so the throughout the lifetime of an asset, throughout the lifetime asset means it may be, say for example, the service life is 10 years. For 10 years, this is the fixed amount will be charged as the depreciation at the end of every year. At the end of, because the depreciation calculation is based on the every year. At the end of every year, the depreciation amount will be reduced from the original price of the asset, and then that will be calculated with the depreciation minus depreciation. Then you will get some value, that is what you can call as the book value for the next year. That is accounted, so that will be accounted for the next year calculation. So likewise, there is a fixed sum is charged as the depreciation amount throughout the lifetime of an asset, so that we can accumulate the sum at the end of the service life of the asset, which is exactly equal to the purchase value of the asset, So now to explain this, we take some assumption. Of course, our assumption is inflation is absent. Assumption, we are taking this, inflation is absent. There is no inflation. So to explain this straight line method of depreciation calculation, so you take net P is the first cost of the asset. So P is the first cost of the asset, and F is the salvage value which you have taken in the calculation, that is S. Here is taking as F, salvage value of the asset. So then this is first cost, in the sense what is the cost of the buying a particular equipment or a machine at that particular time. So that is what we can say first cost of the asset. Salvage value of the asset means for the useful service life of this. So at the end of say for example 10 years, so what is the salvage value? What is the actual value of the asset at the end of 5 years or 10 years? That is what we can say the salvage value. So now N is, you take it as life of the asset. Then we can take this BT, that is book value. So that is what I told, the book value which is kept for accounting purpose. So book value of the asset, at the end of period T, So here this book value is calculated say at the end of every year. So that is B1, B2, B3, B4 like that. So means at the end of first year, what is the value of the asset? That is the book value. We can say actually this first cost is at the end of first year. This first cost will be the depreciation will be depreciation will be minus subtracted from this first cost, so that we can get the book value at the end of first year. Book value at the end of first year. So here D T, that is capital D and T, which will be taken as depreciation amount. We are going to calculate. This is the depreciation amount, say for the period T. For the period T. Okay, so these are the terms which are going to used in calculation of this depreciation by using the straight line method. By using the straight line method. Now I can write the formula that is depreciation and as well as the book value. That is the depreciation is equal to, so dt I will write as depreciation amount for the period T. So this can be calculated by using P minus F, that is first cost minus salvage value, first cost minus salvage value divided by N, divided by N. So this is the fixed amount for every year. This is the amount which has to be reduced, which has to be reduced. This is the first. This will be taken as a fixed amount. It is a fixed amount which is reduced from the first cost to find the book value for the next year. So book value, I'm going to find out the book value, which is at the end of first year. At the end of first year, we are going to take it as dt is equal to, what is the book value of the previous year? What is the book value for the previous year minus depreciation, that is dt. So it can be taken as, say for example, the book value is we are going to take it as t minus t into p by t into p minus f by n. So we can take the equation, or otherwise we can calculate the dt value and find out the bt, book value, for the next, first year. So if I want to find out the bt means b1 is equal to b0 minus t1, d1, b0 minus d1. So that we are going to find out. So for example, we'll take one example on this to find out how to find out the depreciation for this using this method. Say for example, a company purchased equipment whose first cost is given as, say for example, rupees 1 lakh. So this is the first cost is given, and say yes, given that the estimated life, that is n is equal to 8 years, he has mentioned, and the estimated salvage value of the equipment at the end of lifetime, that is salvage value is given, salvage value f is equal to, first cost is p here, and f is also given, which is 20,000 after 8 years. After 8 years it will become 20,000. Then determine the depreciation charge, and the book value at the end of various years. So we need to, at the end of various years means up to 8 years we can find out, right? So here is asking two parameters. One is you find the depreciation charge, and also you have to find the book value. So these are the two parameters you need to find out. Okay. So this is the data which is given. Based on the data, we know that equation. So first, what we do is we can make it as 3 columns. One is the end of year T. We can take it as 3 columns. End of year. The first one is depreciation calculation. That is, we have the equation P minus F by N. So, and one more is we have the book value. So first, write down the depreciation equation. That is dt is equal to P minus F by N. So where 1 lakh minus 20,000 divided by number of years is 8. So 80,000 divided by 8, which will be getting 10,000. So 10,000 is the fixed charge which is to be deducted at the end of every year. So first, if you take this columns, that is 3 columns. One is end of year, okay, and then depreciation. So first we'll take the at the end of first 0 year, means first cost will be coming. There is no depreciation because 0 year there is no depreciation. First cost will become the book value because we'll be entering the 1 lakh as the book value at the time of purchase. At the time of purchase, that is the first cost. Now at the end of 1 year, because after using the 1 year, it has to undergo the depreciation, reduction in the depreciation. So the value of the asset will be reduced. At what amount it has to be deducted? That is what we can calculate at the depreciation. At the end of first year, it is going to be 10,000. 10,000. So rupees 10,000. So this has to be subtracted. That book value, we know the equation. That is book value equation is BT minus 1 minus DT. So what is the BT minus 1? Nothing but B naught. B naught is here, this one. This is B naught. This is B naught minus D1. So this is D1. So this is the D1. So B naught minus D1, that is 1 lakh minus 10,000, which will become 90,000, So likewise, at the end of second year, so here the D2 is constant because it is a fixed sum of charge. As we told that this straight line method, it will not be vary with the time. It will not vary with the time. So it is a fixed amount. Every year we'll be reducing the 10,000 from the book value of the previous year. So now this will become D2 and this will become B1. So what is the B1 value? So here, if I want to find out the book value for the BT, that is B2, B2 is equal to B2 minus 1. That is B2 minus 1 is B1. B1 minus D2. So B2 is equal to what I am going to calculate? B1 minus D2. So what is the B1 value here? B1 is 90,000. B1 is 90,000 minus D2 is 10,000. So from this, I'll be getting B2 as 80,000. B2 as 80,000. So similarly, for every year, if I calculate for third year, that is D3 is same, that is rupees 10,000 only. Then this will become B3 is equal to B2 minus D3. This minus this. So 80 minus 10,000 is 70,000. Then 4, 10,000 only. Then this will become 60,000. 70,000 minus 10,000. At the end of 5, 10,000. Then 50,000. Then at the end of 6 year, the asset value is keep reducing. The asset value is keep reducing. So at the end of 7th year, 10,000. This is 30,000. Then at the end of 8th year, if you look at, this should be equal to the approximately equal to the salvage value. So at the end of service life is given as 8 years. So 8 years, what is the service life is given? It is given in the problem as 20,000. So likewise, see, that's what we have told. At the end of service life. At the end of service life, the asset will be exactly equal to the service life of the asset. Salvage value of the asset. So we'll stop today, and we'll discuss the next method. We'll discuss in the next class.